trouble breathing. Not yet, at least.
Okay. All right, that's good.
Yeah, that's good. So, how was
Thought
your day
I'd
yesterday? What?
regale you today with some, I thought I'd regale you today with some classic music there, and had some lyrics that are very applicable in these days. So there you
I mean, as I said, always creative,
go.
and I like it all.
Yes. All right. Yeah, I can't wait for the trade review. There's some interesting stock movement today, so I think people should have some good trades because there's a lot of choppiness. There was opportunity, but it actually wasn't that easy. So
Yeah, I'm really interested
so
how
anyways,
people
I'll let.
traded today. It wasn't that easy. I'm lucky I finished the first minute. But after
Yeah.
that, just chop happened. I don't know. I mean, Uber looks like it was nice. What caused it to pop up? I just missed this move here. Were there any news on it?
Yeah, there was a rumor that they've made a potential offer to buy Grubhub, GRUB. So if
Mm-hmm.
you look at Grub, it also had a big pop up, but then it's been halted a number of times, and
Mm-hmm.
so
I see that.
yeah.
Okay, that's interesting. So thank you, Peter, and let
All right, so I'll let you get to the review.
thank you. So let's go there, everyone. How was your day, everyone? First, let me see how you did well today. Oh, then you see, even doctors get sick. Let me get everything ready there. You missed INO ABCD pattern. I just turned off my dash quickly today. But this is actually something I really love. And this is the first part where I like to take stuff to the long side, and this is the part where I really love them. Let me get my epic pen. Not this, not this, not this. I got dumped by my okay, see. So I know, look at these guys. This part here is the one I love. So when a stock is doing an engulfing, I usually like it for the short side. If I see it breaking this area right here, the low of the body, somewhere there, I would try to take it to the short side for a dump, for an engulfing crack setup. And you know what's an engulfing crack setup? Stock opening is so strong, it gets engulfed, and then it cracks to the downside, or the other way around. It drops a lot, then it gets engulfed, and then it cracks to another direction. That's an engulfing crack step, and that's how I like to trade it. When I see that it got engulfed, but then it closed to view up above all the moving average, with the direction of the trend, with the direction of the moving average, with the direction of the gap, I love to get on a new 5-minute high as a 15-minute opening range breakout. You see this here? This is a 15-minute open range breakout. If you miss this here, after that it offers you a bearish engulfing sandwich, which is a bullish pattern right here, long, red, long, and you combine this 15-minute open range breakout with the bearish engulfing sandwich, which is another setup. You get an on a new 5-minute high with the stop loss right there. Not literally an ABCD pattern, but this was really good. I love this one. Unfortunately, you missed it, and I would have definitely regretted missing this thing as well. Hey Anne, Ala, do you do engulfing trade on basis of 5-minute chart? Not always. If it's the first 1-minute chart, I would do it on the 1-minute chart. Like the first 2 minutes, 3 minutes, 5 minutes, I'll do it based on the 1-minute chart. Especially if an engulfing happens the first 2 minutes. I could do it also based on the 2-minute chart at the open. Then at the 5-minute chart, and that's it. After that, I just don't look at it. Maybe later on the 15-minute chart if it's clear. But yeah, that's it. So what were we looking at? Okay, yeah, J-Bones trade. Let's take this one and get to this one. Nvidia, it was on our watch list today, but I didn't trade it. So let's see what you did. You traded ZM, ABCD pattern type C, and remember guys, what's ABCD pattern type C? It's a stock which is moving so strong to the long side, but then it's doing a parabolic pullback. When you see this parabolic pullback, you then take it to the long side on the first high, which is right here. You take it on the second after a W shape. And what's your stop loss? your stop loss either the second low, which is the safest if you take these type of patterns, or you put your stop loss at a new 1 minute low if it's at a breakout area. And I assume that you took it to the long side right here. Your stop loss was a new 1 minute low. Let me see. Strong from market open. It was strong move with the average true range of $11. It did around $9 or $7, so it had some room a little bit there. Started to get volume, broke out from the previous daily highs. You see guys the daily levels, which are marked right there. The entry breakout, putting in a new relative high. Stop at a new 1 minute low. And this was a good stop loss, by the way, guys. When you take this type of ABCD patterns with a W shape after a strong pullback at a breakout area, you could either put your stop loss at the previous low, which is the safest. And look at this. If this was the stop loss, it would have worked at least slightly right there. Or you put it at a new 1 minute low. Unfortunately, it didn't work out, but it still works out a decent amount of times. Intended 2 to 1, but you ended up having minus 125 with slippage. Now let's see. Okay, so yeah, this was totally fine, and I like this setup. Strong move, W shape, taking it at the breakout area, but unfortunately it gets stepped out. This was totally fine, good setup, but it just didn't work out. And look at these guys. It did break out, you see, W shape. It did break out in the 2 minute chart, and there it formed a reverse hammer or a shooting star, looking like a fake breakout, getting back into the range. This is something I don't really love to see, and I think I would have exited there as well, even if it didn't hit my stop loss. So this was totally fine setup. Just didn't work out. Hey Gerard C, how are you doing? And how was your day? Traded options today? Now let's see what J-Bone did on this trade here. Nvidia parabolic reversal, and look at these guys. This is really parabolic. Where is the 5 minute chart? You see it dropped a lot right here, so extended from the 9 moving average on the 5 minute chart. Eventually it is going to pull back, right? And J-Bone waited for that pullback, and look at how patient he was. He saw this drop here, first 2 minute candle, which is a doji. This is more bearish than it's bullish, but still you have slightly increasing volume at the low of the day, which is something good to see. You have a new 2 minute high. This could have been the entry right here, but this was so early, and the candles on the 1 minute chart, they weren't good looking, so just better to avoid it at the first new 2 minute candle. It held this area right here, did this candle, which is bullish. This time you don't have any selling pressure, and let me just zoom it in to the 1 minute chart. You can see that here you have this selling pressure, wicks on the top, and I would have been hesitant as well, taking it to the long side anywhere here because of those wicks. But then finally it closed more bullish. So for me, the perfect entry was this candle. You got a little bit later entry, not so much, but still a little bit later. But this was still a good entry, as close as possible to the support, and you partial on the way up. So the target on this type of setups, guys, we remember it's the 9 moving average on the 5 minute chart. What I don't like in this setup is this moving average, horizontal moving average. A lot of times it just goes into this moving average, bounces out of it, and drops down. But in this case it was totally fine because this moving average was a little bit far, and it could serve as a target there. You traded BA using options. Okay, that's good. You took this one, Ryan, to the long side. We're finally getting to those parabolic reversals. And by the way, guys, Ryan here, he loves trading to the long side mostly, and I think he's trading only to the long side, right, Ryan? If I'm not wrong, he doesn't take any short trades. He feels like he reads the longs more, and that's his style. He's doing really well with that style. He's pretty consistent and trading only to the long side, so you don't really have to trade something which everyone trades if you don't see that it suits you. Even when the markets are selling off, and look at this, Nvidia was selling off a lot, Ryan could find his entry to the long side here. Peter, let's see what you did there. I would like to be able to go short, I just can't. You'll be able to do that in the future, I think, but you're doing well with longs, right? As long as you're making money, it's still good. So Peter, you took it to the long side here. This stock is, what's this stock? Anyone? AMD, and that was at the open. Now let's open it on my 5-minute chart. On my chart here, guys, make sure if you send screenshots, it will be better just to have multiple screenshots so that we look at the general idea there, and so that we could cover it all. Because look at this, on the 1-minute chart where you took it to the long side, it doesn't look so bad. It sold off, did sort of a hammer or doge down here. You took it to the long side. One thing I don't like when you took it to the long side is the moving average on the 1 or the 2-minute chart right there. But look at the 5-minute chart. First of all, the 15-minute chart. The 15-minute chart is selling off double top and it's dropping down. This is a bearish sign right there. On the 5-minute chart, the same thing. It's more weak than it's strong. At the open, yes, it opened up strong there, here, and then it started selling off, breaking this pre-market level right there. So now it's more weak than it's long. So taking it to the long side right here was a little bit early. It's first of all not so much extended from the 9-moving average in the 5-minute chart, only 20 cents. So the risk to reward isn't there. Let me just get this pen. Yeah, the risk to reward just isn't there. You have horizontal moving average on the way. It's more weak than it's strong. So better was waiting for a reverse ABCD pattern or wait for it to get really extended, which happened here. You see, it's getting really extended from the 9-moving average in the 5-minute chart, doing some reversal patterns right there, a new high, and you could take it to the long side right there. I assume you did it eventually. You see this? You tried it once, but you got subbed out. Tried it one more time and get subbed out. Then you took it to the short side. The short was amazing. This was a reverse ABC. Remember what you said? You just wait for the pattern, and that's the pattern here. Drop down, consolidated, couldn't go to the long side, broke the base area right here. You take it to the short side, have your stop loss right there, and that's a good reward. All the way down here, that was a good risk to reward. Yes, this is the risk, this is the reward. That's really decent. I love it. Now it's getting really extended. So far from the 9-moving average in the 5-minute chart, you take it to the long side on a new 2-minute high, which was great, and you started partialing. Look at this. This is why I don't like those horizontal moving averages. They're just a little bit of pain. It resisted it or rejected it 2 times, and then it eventually broke it there. So yeah, this was really good. This long I wouldn't have taken it. It's just a little bit late. It rejected it multiple times. It could have just rejected it one more time. You went in for a small profit right there. But look at this. Another thing. This partial here wasn't really necessary. Why is that? It rejected this level once, twice, almost rejected it here, but eventually it broke it up. Once it broke the level which was holding it down there, we should expect that it will either run up or pull back into this level again, reject it, and then continue shooting higher. So yeah, this is not bad partial looking at what it did before, but this partial wasn't really necessary because now it did break the resistance. There is no reason to just exit out of this trade. But still, good management, really good stop losses. I love how you are holding and you're reading the price action. Ethan, let me get your trade here. Close that. Ethan traded NVAX. Now this was good. I watched this trade. I missed this trade, unfortunately. I was a little bit mad at myself, but I'm glad that you, Ethan, caught it. NVAX was strong on the daily. It gapped up strong in the pre-market, pulled back, and look what happened here. It did break the pre-market level, which is here, right? It broke this level we have right there, and then it immediately got bought back up, closing as a hammer. And this was a good 1-minute open range breakout. This was an A+ open range breakout step. Strong stock, pulling back at the open. It's opening up weak, but it immediately squeezes the shorts back up, closing as a hammer. New high, 1-minute open range breakout. This is an A+ open range breakout. I'm really happy you caught this move. This was a really good, decent move, and the rest at break even. A little bit below. Below break even, but that's totally fine. I think it's just slippage because the dump was a little bit fast. I mean, with the 5-minute chart engulfing down. Yeah, let's see, this is the engulfing crack setup right here. Opened up so strong right here on the 5-minute chart. Got engulfed on the second 5-minute chart. Now you wait for the crack, and look at this. It's dropping down, small pullback here on the 1-minute chart. So you could trade an engulfing crack on the 5-minute chart, but what would be your stop loss? Would you just put it half of the candle? It's a little bit far, right? Having your stop loss at the $41. At the high is definitely so much. So now you have the setup. You have the engulfing crack setup on the 5-minute chart. What's your stop loss? You have the setup 1. You have the entry, let's say here, but if you get your entry here, you still don't have a decent stop loss. You need to find a really good entry with a good stop loss and a good target. You could have the target, maybe, let's say this moving average. Now you need the entry and the stop loss. You see that on the 1-minute chart, it's pulling back, rejecting some sort of level, making a new 1-minute low. Now you're having an engulfing crack setup on the 5-minute chart. You have a pullback on the 1-minute chart. You have a good entry on the 1-minute chart. You have a good stop loss on the 1-minute chart, and you have a target also there on the 1-minute chart. Good risk, good reward, good setup. I mean, with that 5-minute engulfing down, have identical trade, never same. Use view up as your stop loss. When you took it to the long side, view up was your stop loss, right, Bobby? Yeah, I would. I usually go for tighter stop losses. I wouldn't have done view up. If I'm really aggressive, I would just use the 1-minute candle right here, because if right at the open there is a lot of volume, and if a stock picks up a direction, it will not look back. If I am a little bit cautious, I'll put it at the wick right here, but still view up isn't bad. I love getting with tight stop losses, but NVAX is a little bit volatile. Maybe these tight stop losses could also get you out with a huge loss. Oh, you got the engulfing crack, Bobby. That's good. Yeah, exactly, Ala. If you see a setup, that's the first step. Once you see the setup, you need to be patient, waiting for the entry and for the stop loss. Now here it dropped down into this moving averages right here. Wasn't as weak as expected. Went up. I think this would be a lightning bolt for Peter, if I'm not wrong. Broke above view up, pull back, came back up. You take it to the long side, put your stop loss at a new 1-minute low, and then partial on the way up. This I wouldn't have done. Why is that? Look at these guys. This was the high of the day. Here it did break view up. You had a good looking 5-minute candle, broke back up, which is decent. You have the breakout area right here. It held it one more time, but it didn't shoot up. Then you had a fake breakout here with an increasing volume. You see this volume with the fake breakout? This just shows you that the stock isn't strong. It couldn't go up. It immediately got sold back down. Yes, it held these areas right here, but looking at the 5-minute chart, it's still closing below the moving averages. It's just not ready to go to the long side. Now this entry to the long side, it was perfect. Why is that? Because now you had a sort of reverse ABCD pattern right there. It did break down below those levels right here, but what happened there? Fake breakdown, increasing volume, dropped back down, but got back up. So this, I wouldn't have taken it to the long side anywhere here because of this fake breakout, and because it was still forming the reverse ABCD pattern. Once it did the reverse ABCD pattern, I'm liking it to the short side. I either would have shorted it here, I think, and if I shorted it here, I wouldn't have made any money because I would be stopped out because this was a fake breakout. But I think I could have re-entered to the long side based on what I see right there. But here, the only setup I'll be interested at is a short, not a long. And by the way, I traded some momentum today. This is SPY. Doesn't look like a strong move or like too much, but look what happened. It's similar to what happened on NVAX, right? You have this level here from the pre-market, this right here from the pre-market. You have a double top or triple top in the pre-market. At the open, it breaks out and it sells off. Now I'm interested in taking it to the short side, but what happens? It gets squeezed back up, stopping out all the shorts. What did I do? I took it to the long side and I just had a really tight stop loss. Why is that? All the shorts are getting squeezed. Everyone who took it to the short side based on what happened in the pre-market and now it's making a new 5-minute low, tried to take it to the short side. They are getting squeezed and they have to bail on their short position. So what I do, I take to the long side, and I just had a really tight stop loss. At the open, you have volume, the market is enough volatile. If the setup works out, it will just shoot back up. That was my tight stop loss partial, and that was it for me for today. I had one losing trade, by the way, as well. I lost on SDC and I made money on SPY, but this was enough. Only 2 trades today. I will go through my loser on SDC as well once we're done here. You're welcome, Ethan. And let's see what Han did there. Thank you. So Han traded SPXL, and this is a good thing as well, guys. If you can trade SPY, SPXL is literally identical to the SPY, and you could see here what happened. It opened up weak, this fake week right here, then it squeezed back up, and then it dropped, similar to the SPY. But SPXL is less expensive, so you could take decent amount of share size there. If you don't have enough buying power to trade the SPY with tight stop losses, you'll need a lot of shares, of course. With SPXL, you could do that, and look what happened. It did an engulfing crack setup right here on the 2-minute chart, right? Dropped down. If you miss the move, now it's doing a reverse ABCD pattern, new 1-minute low. You take it to the short side, and that was a really good move right there. I love it. Little bit over partialing, right? I mean, look at this, like 1, 2, 3 at the same minute. You either take big partial instead of having multiple commissions for a lot of partials, or just put limit orders. And what do I do when I'm trading? When I don't have limit orders and I see that the stock is going in my direction, I sometimes tend to take a lot of partials. But to overcome that problem, once I'm in a trade, I calculate my risk and I just set limit order here, let's say here, and then I just lay my hands off and I watch what's going to do. It either fills my orders or it goes against me. It's easier to do that. Hey Jason, what is there with IBB? I don't know what's that. Okay, that's stock. I don't really like it at this area. It's just a little bit late here to trade it. It already did the drop. It did bounce out of here. It looks more weak than strong. So if I am interested in trading it to any direction right now, it will be to the short side, but it could go either way at this area. I'm more short biased on it. Hey James, I'm good. I hope you are good as well. What's your recommendation of taking partial, getting all out and adding? I feel like I'm never getting the maximum rewards again. Han, my recommendation for taking partials is to take the first partial at 2 hours. You need to try your best to hold on for big winners, especially if you are having less than 50% win rate. You need to let your winners run. Once you get your partial at 2 hours, after that, just read the price action. For example, here, look at this. It's making higher highs and higher lows, higher highs and higher lows. No need to partial. If you are patient enough, make your partial the first new 2 or 1 minute low. Here you could see that it did this fake breakout, sort of a bullish engulfing sandwich on the 2-minute chart. It did break out, then it had a reversal candle. Because of that, I'll take a big partial. And I take only 20% or 10% partial. I will take a big partial. First of all, at 2 hours, if these 2 hours, let's say, look at this here. You entered, let's assume that you entered right here, it's going into your direction, and look at this, the closest level you have as a resistance is the pre-market high. No other level on your way. Let's say you entered here, this is the 2 hours, and there is still a lot of room to the high of the day. What will I do? I'll take only small 2-hour partial, 20%. Why is that? There is no reason for me to take any partials. I know that it could go up there, but I just want to lock in some profits because I got my risk to reward. Now let's say you got in here, this is the high of the day, and this is the 2-hour area. In this case, I will not take only 20% at the high of the day. I might take 70% at the high of the day. I might take 80% at the high of the day, unless it just bursts through the high of the day. That will be my partial. Why is that? Because I know that maybe it will form a double top and it will go against me, and there is no reason to take only 20% partial and exit the rest of 80%. I'll break even. It depends on the levels you have there. Let's say it's going up, you partialed at 2 hours 20%, right? And after you took some partial, it pulled back, it didn't touch your stop loss, started coming back up. This is your break even, this is the level it bounced off, this is the breakout area of the previous high, and this is your average. What will I do? I know that there is no reason now to hold to my break even area. If it breaks this area right here, which it bounced off, it's most likely going to my break even. What am I going to do? I'm going to add a little bit here and move my stop loss to the level it bounced off. So if it's going straight up, I'll take 20% at my 2 hours, and I'll take the rest at the half of the day. It's going up, pulling back, and then coming back up, forming a new stop loss. I will add here, and I will move my stop loss a little bit higher. You can't always add. Sometimes you don't have opportunity to add into your trade. But if you have it, it should be after a pullback. You're welcome. How do you anticipate where the squeeze ends? Then once the squeeze happens, you could see that it's going fast up. Once it starts resisting for a few seconds and I see that the price action on the time and sales gets slower, I assume that it ends. It's not necessary that I'm right, but you could see here on the SPY, look at my exit. I exited all out right here. This was my first partial here, and I exit all out there. Why is that? I saw that it went up, it rejected it, it dropped down. Tried to break it one more time, rejected it, dropped down. Came back up and I just decided to bail on it. It did break up a little bit above it, but then it dropped down. The speed or the squeeze to the long side, it was good, but at certain area it gets heavier. Once I see that it's getting heavier, I'm just exiting all out there. Well, I think I just got lucky there. Yeah, exactly. If it's holding for a few seconds but then it breaks up, it shows that the move is still going to happen, but it was so heavy there. There was no reason for me to just... Why not taking a short from there? It's tough to take it to the short from here. I'm not sure where to put my stop loss. Let's say I'm taking it to the short side here. This was my last partial. Because it was so heavy, where will be my stop loss? And look at this, it's breaking it here, right? If I take it to the short side here, I can just put random stop loss. I need to have a technical stop loss right there. And if I do have any stop loss, like random stop loss, I'll be stopped out on the very next candle, and then it just works out. I'm not 100% sure that it will drop down, but from reading the tape, from seeing how it's behaving, I assume that it can't go any higher, or maybe it will go a little bit higher, but I have no idea how far it's going to go. It could have just simply continued going higher, but at that moment it didn't look good. It didn't look good for me to stay long on it, but it wasn't still good to take it to the short side. Taking the short at 9:35, that was a good one. You see, Engulfing cracks it up, and then at 9:35 it's breaking down. That was a good short. But I was done for the day this trade. I got to my goal. I was literally at 3 hours, because this trade, it was 4 hours realized, and I lost 1 hour on SDC, so I'm up 3 hours. And you know, guys, that 3 hours is my goal. If I'm sitting right at the barrier of my goal, I just stop out for the day. If I had 5 hours at the open, I'll just risk it. I'll give it 1 or 2 more chances. Let's say my next trade drops, loses, and I'm up 4 hours. I might stop there, or I might try one more time. Then I'm 3 hours for the day, and I will stop there. If I'm 5 hours and I take another trade and it works out, I'll just continue trading for the rest of the day. But when I'm literally at the face of my goal, I just stop out. Yes, then my goal is 3 hours, and today it's 3 hours only. It's not so good at some other days, but still was a decent day. Hey Amol, I'm doing well. I hope you are good as well. Yeah, my max loss is 3 hours, and my daily goal is 3 hours as well. Okay. MOR is the fixed risk I have. It varies from one trader to another. Some people have $30 maximum per trade, some might have 10, some might have $50 risk per trade. So that's the risk per trade, that's the R. If I'm risking $50 per trade, I want to make at least 2 Rs, which is $100 per trade. If it's $10, 2 Rs is 20. If it's $30, 2 Rs is $60. For me, with my risk, my goal is 3 Rs. Last month, Pito, I don't remember, but it was more than 80, 75, I think. But my average, I started having those huge Rs after the parabolic reversals and after this market became crazy. But my average was around 30 to 40. Around 40, I think. It was 40 Rs per month average. But last 2 months, or 3 months, once the market started going crazy, it peaked up for me. So Lenny, let's see what you traded. CL, and I like this one as well, was strong, opened up strong as well, closed as a doji at the high of the day, dropped a lot there, and you have higher low wave, higher low wave, higher low wave, plus you have flat bot or flat support right there. So it formed a descending triangle, and for a descending triangle, you could either enter as close as possible to the resistance, to the highs. In this case, your stop loss will be the previous high or the last high right there. You could enter before the break, anticipating the break, having a stop loss at least a new 1 minute high, or you could go for the breakout just a little bit heavily for a scalp for the break with a stop loss a couple of cents above you. You had a good entry as close as possible to the resistance right there. One thing I would have done is not exiting all out there. You had a really good entry for a good setup. This is a breakout setup. If it gives you the risk to reward, remember what you said, 2 Rs at least. If it's giving you your 2 Rs at or before the breakout, you could take it, 2 Rs before the breakout. But remember, you had a good entry. There is no reason to partial yet. The breakout might happen. This is a breakout setup. You could leave most of your position for the breakout after it happens. Then once it gets to the daily level, increasing volume at the low of the day, that's where you could just exit most of your position right there. This short wasn't so bad. Why is that? You had the support area right here. Then it dropped down, it pulled back, and started resisting the previous support. The support became resistance, started making reverse ABCD patterns, dropping down where you took, that's where you took it to the short side. The 1 minute chart looked perfect. The 5 minute chart though didn't look good. You see, it's making higher highs and higher lows. No enough signals. I wouldn't say it was a bad setup. It was a decent one. There was not A plus, but still not horrible. You have enough confirmations on the 1 minute chart. You try to get an entry as close as possible to the resistance. When you are trying to do that, sometimes you don't get the new lows. It's similar to this one. It made a new 5 minute high, but you took it to the short side as close as possible to the resistance, but it wasn't. And the 1 minute chart though gave you good confirmation, and overall picture was really good. Here you had a confirmation on the 1 minute chart, a confirmation on the 5 minute chart that it's getting back into the previous resistance, but it was still tough on the 5 minute chart. mRNA. Now this is not bad, it just didn't work out. Huge drop right there, bounce off a daily level, resisting below view up, making a new 5 minute low, new 1 minute low, reverse ABCD pattern. Took it to the short side, worked a little bit in your favor, but then it just got you stopped out. I wouldn't have held so long to this one right here. It tried to break down, came back up, tried to break one more time and came back up. That would have been enough of a signal for me to bail out. It's making higher low waves every time it's trying to break out. It's making a higher low wave. There is no reason to hold it to my original stop loss. I would just bail at break even or for a small loss right there. But the setup, the initial setup, it was good. mRNA was a trap. It was a trap. Now Nvidia, let's see what happened there. Nvidia, I wouldn't have taken this reverse ABCD pattern right here. The pullback wasn't just enough. Yes, this was good. This here, it was good. Drop down, pulled back. Look at this fake breakout right here. Higher low wave. It's breaking up, fake breakout, touching the non-moving average in the 5-minute chart. And then it immediately sells off, making a new 1-minute low, reverse ABCD pattern right there. You take it to the short side, that was good. Then it continued dropping down, and this wasn't just enough of a pullback yet. It's the first new 5-minute high, and look how long it held this level right here. It's enough extended from the non-moving average in the 5-minute chart. Not perfect to the long side for parabolic reversal unless your target is this horizontal moving average right here, but definitely not good enough for a short right there. Let's see your trade here. Let me see how is your name pronounced? Guillaume? Guillaume. Let it be Guillaume. I haven't pronouncing it well. Okay, that's good. MU. Let's see what you did there. First trade, exited by mistakes. Second trade, tried to play the break of the descending triangle. Now look at this. And guys, let me know, what do you think about this trade here? Everyone? Or anyone? Yes, Lo, I love this. It is too extended. Exactly, that's the main reason there. On the 1-minute chart, it looks perfect. If you look at it on the 1-minute chart, I wouldn't say perfect. Look at this first of all. Increasing volume at the low of the day above daily level, right? That's the first thing. The rest is not that bad. It looks like it's descending below the 9-moving average in the 1-minute chart. It's having the flat area right here. It did break it to take it to the short side for the breakout. But look at the 5-minute chart. It dropped down. It's still so far from the 9-moving average in the 5-minute chart. It is descending on the 1-minute chart, but on the 5-minute chart we see chop. It's not so clear on the 5-minute chart. Increasing volume at the high of the day. This is the climactic volume. It dropped a lot with no pullbacks. This was a really good long right here actually. Yeah, this was been a really good long for parabolic reversal after climactic volume right there. And when I see that there is a hammer, whether it's on the 1-minute chart, on the 5-minute chart, on the 15-minute chart, any chart, but if I see a hammer at the low of the day and then I see a reverse ABCD forming into that hammer right there, I usually don't take those reverse ABCD patterns because a lot of times it's just ending up doing a higher low wave and then going back up. Yeah, Arthur, the long would have been really good. I also agree. If this long right here, it would have been perfect. Here, definitely not good. But yeah, this was a short. This short, at least, it wasn't bad. I mean, at least in this short, you had decent room all the way to the bodies area. Then you see if it breaks it, you could either aim to the low of the day and then exit there for a quick scalp. But still, even the short here, it was a little bit early, I think. Samir, you're welcome. And let's see what Samir did. You traded NVAX on the 5-minute chart. Now this was the 3-bar setup. It's not bad. I personally wouldn't have taken it because it was a little bit so extended right there. It already did a huge move, but still not bad. Looking at the 5-minute chart, it's getting bought up. You went with the trend. You went for a scalp. I assume you had a really tight stop loss on this one since you partialed here. Wasn't the worst. Wasn't the best, but still wasn't the worst. It was decent. It was good enough. This was perfect. Why is that? Look at this. It did the breakout. It pulled back. You see here. You didn't take it on the first new 5-minute high because this wasn't a good drop right here. It tried to break up. It did break up here. Fake breakout, sold off, and then it started selling off. Some people might have gotten faken out by this new 5-minute high, assuming that yes, it was so strong. This is a new 5-minute high after a pullback. Some might take it to the long side, and I know some might have tried it here because I used to try that before. We don't have to chase a stock when there is no enough confirmation. You have the daily level right here. You see the breakdown, fake breakdown. I love this. A hammer, good thing. making a new 5-minute high. Now this becomes decent if you take it to the long side here after this breakdown. This is good. You decided to be patient enough. You waited for it to break the consolidation area which it had before, right there, and that was your entry to the long side. So your entry was the best entry I could dream of. This was good. This wouldn't have been the best, but still this would have been good. One thing which would have been scary is this area right here. It could have just bounced out of it. This was a really good entry right here. I love it. And look at what he did, guys. I love the partials. I assume that this was that was 2 R's. That's why he partialed there. And look at that. He didn't take any partials on the way up. He decided to wait and see what it's going to do. And look what his next partial was. A new 5-minute low. That was a smart partial right here. He could have just held on to it if it continued doing higher highs and higher lows. But since it didn't do that, I assume that was a small partial right there. It did a new 5-minute low, so he took more of his position. And look at that, guys. It's making a new high. And new highs, he didn't take any partials. He had the goal, the daily level, and he was patient enough. He left some. He took maybe most of his position at the new 5-minute low, but he left some to his daily level. He knew that this drop right here could have been just a pullback. There is no reason to exit all, but there is a reason to partial. And that was his goal and his target, and it did eventually reach it. So good job there, Samir. J-Bone, let's see what you did here on INO. Now this is something I love as well. INO, look at the daily, guys. What do you see on the daily? An ABCD pattern, right? I was long biased on it yesterday, but yesterday it was a little bit choppy. By the way, I lost a lot on INO yesterday. I lost around 4 hours on INO. I did make it on other stocks, but INO gave me a really hard time. Because I liked this yesterday. It's going up, it's pulling back. You see the range here. See the range here? And yesterday it gapped up. And I usually base my intraday trades based on how I see or what I could see from the daily chart. Here on the daily chart, or yesterday on the daily chart, I saw strength. I saw that it gapped up. I assumed it might drop down. It might touch this close right here and then bounce out of it, but overall it was a long. I couldn't just see it short there. Today, look at this, it did break this range right here, and today it just looks like it doesn't have any room, although it's 16. I'm not saying that it will go to 16, but maybe in the next few days it will go at least to 15 or 16. But yeah, I would have been really long biased based on the daily today as well on INO. On the pre-market, it wasn't weak. Yes, it was wicking down, but it still was getting bought back up. It was still above all the moving averages on all the time frames. This is a harmonious chart. And then look at the 1 minute chart. It opened up so bullish, right? Closed above the pre-market area or pre-market level right here. And the new 1 minute high, open range breakout. Indicators confirmation, harmonious chart. You see a harmonious chart. On all the charts, it looks long. It tested the moving averages twice. Got a bad feel. You aimed for 1178. That was his entry. This level right here, the red line. That's what J-Bone aimed for. Stop was 1167. Another test of the level. That was his stop loss right here. This daily level. So he wanted to get in with 11 cents stop loss, but unfortunately he got a little bit worse fill. Wanted to get 2R but got 1R. And why did he get 1R? Because he saw that it was going up parabolically. It was extended from the 9 moving average on the 5-minute chart. It started stalling out at the daily level he had. It had a shooting star at the high of the day, made a new 2-minute low, and after that he did assume that it will go back to his break even or his stop loss. There is no reason to get or make a winning trade a losing trade, and that's why he just exited at 1R. Got in for one thing, was patient enough with no partials at all, but the price action told him that he should take partial or he should bail on the trade, and that's why he exited. And there are enough reasons to bail on this trade. Daily level on the way, shooting star at the high of the day, new 2-minute low, extended from the 9 moving average on the 5-minute chart. It's forming another setup. You don't need any other confirmation to bail on the trade. Ben, basically, you could have 1 minute open range breakout, you could have 2 minute open range breakout, 5 minute, 15 minute, 10 minute open range breakout. But one thing which a lot of people, not a lot, maybe at least some people understand wrong, is that open range breakout means getting in at the opening range. If someone loves the open range breakout to the 1 minute chart, they will be staring at the chart. They want to see the 1 minute candle closes, and they'll just blindly get in at a new 1 minute high. The 1 minute doesn't work. They'll wait for a 2 minute open range breakout. They'll wait for a break of the high with a 2 minute candle, and then they'll take it to the long side for a 2 minute open range breakout. Same thing with the 5 minute chart. They'll look at the 5 minute chart. They'll wait for it to close. It doesn't matter how big the 5 minute candle was, where it was, below moving average, above moving average, it makes a new 5 minute high. They get into the long side for a 5 minute open range breakout. That's not the way to trade open range breakout. You need to have more reasons than only the open range breakout. In this case on INO, as I told you, you have a good looking daily chart. It looks like it will go to the long side. It's long on all the time frames, on the 1 minute chart, on the 2, on the 5, the 15, the 30, the 60. It's above all the moving averages. It's closing bullish right there. It's closed to view up. It didn't make a move which is more than the average true range. He was patient and waited for 1 minute just to determine where it's going to go, and then went in for a 1 minute open range breakout. Would a 2 minute open range breakout be good in this case? I think yes, it will be. Why is that? Look at this. You got in at a 1 minute open range breakout. It's still at the same range, smaller than the average true range, close to view up, still looking bullish. You could take it to the 2 minute open range breakout. Would a 5 minute open range breakout be good? Let's assume that it did break here. Where is the 5 minute breakout? Let's say assume here it did break out. Would this be a good entry for a 5 minute open range breakout? For me, 100%, I wouldn't even think about taking it to the long side right here. Why is that? Did around $1 or $1 and a few cents move to the long side. It's extended from view up, extended from the moving averages. The average true range right there is somewhere around $1.50, so it did most of the move up there. I will not have a technical stop loss if I take it to the long side here as a 5 minute open range breakout. I will not have a stop loss, a decent stop loss. I mean, unless I just use any random level as my stop loss, and that's not the way of placing stop losses. So the 5 minute open range breakout, even if it breaks above it, isn't good for this setup. Now let's look at this. 15 minute open range breakout. Is a 15 minute open range breakout good in this case? Yes, it is good. Why is that? It did an engulfing crack setup, which failed. Engulfing candle, and it didn't do an engulfing crack setup, and it got back up, still closed back up. You see strength on the daily chart. You still see strength on the 15 minute chart. You see that it's still above the 15 minute candles, no new 15 minute high. You see that on the 5 minute chart it started forming higher highs and higher lows. It's breaking above the high. So this is the 15 minute candle. Those are wicks of the 15 minute candle, because this is the third candle, right? This will be the body of the 15 minute candle. Those will be the wicks of the 15 minute candle, and it's making a new 5 minute high. You could take it for a 15 minute open range breakout, because you see a setup here. You see that it's close to view up. The move is still small. It's still bullish on the daily chart. So the 15 minute open range breakout in this case will be good. The 10 minute open range breakout, will it be good in this case? If you use the 10 minute candles, this will be something like this. You have this body right here. You have this wick right here, and you have another wick, small wick down here. Would I take this thing for a 10 minute open range breakout in this candle? Definitely not. There is a huge selling pressure on the top right there. It's making new 5 minute lower high on the 5 minute chart. This is not a decent 10 minute open range breakout. So yeah, you do trade the open range breakouts, but you need to combine it with the other information you have there. J-bone, it just depends. You see on the first 1 minute candle or the first 15 or 20 seconds how the candle moves, or how the price moves. If the price moves, you could see the price going 67, 68, 69, 70. I mean, it's fast, it's moving fast, but you see the tick going up and down. Yes, it is volatile, but the risk there is manageable. If it's just jumping up, opening at 78, jumping to 1213, jumping to 1188, jumping down to 1150, it's just crazy with crazy spread, that's really volatile, and I'll just avoid these type of stocks. If you see that it's moving, You see the price action going up and down. Yes, it's crazy. Yes, it's going up and then it's going so much down and then it's going so much up. But you see how it's moving. This is manageable price action. So if it's just jumping between levels, in this case, you definitely need to have a wider stop loss to avoid slippages. If it's moving, even with a tight stop loss, you will get you will avoid slippage. Heather, it's the first candle. Is it doji? I'll not trade it. I'll just wait for another candle to show me what's going to happen. If the first candle is a doji, but I see that overall on the daily, the 15-minute chart, the 30-minute chart, the 5-minute chart, the stock is still bullish, I would take it with the direction of the other time frames. So basically you need to combine everything together. Yes, I do use limit orders sometimes. Let me actually show you one trade I have taken. I'm not yeah, I'll actually show you a trade I've taken with a limit order. For that I'll need WhatsApp, so sorry about this because I sent it to someone. So give me 1 second and I'll show you an example of that trade. Give me 1 second. I don't do that all the time, but sometimes I do. And in this case, I actually did. Okay guys, sorry about this horrible screenshot. Because this is not a screenshot, this is just a picture. And you could see that I took a short here. You see this entry? First of all, this was my short and I got stopped out there. And I'll let you know why I got stopped out. But then I shorted it one more time here with 1 cent stop loss. This was 1 cent stop loss right there. And then I just took partials all the way down. Now, how did I trade this thing? It was a level 2 base trade. I saw that it was strong. Then at 10-12 there were around 300 or 400,000 shares. And look at this. If you look at the 1 minute chart in AL, on average you had around 150,000 shares traded. So it went into a wall at 10-12 of 500,000 shares. I assume that it will just not simply get through it in 1 minute candle. So how do I trade those level 2 waves? If the stock already did a huge move, a move like this, with no decent pullback, the candles are making average, it doesn't matter how much shares, but still it needs to be way more than the wall there. The wall here is 500,000 shares. It's making around 170, 150 shares per minute. It's the first time it's getting into this wall. I take it to the short side with the limit order, not with the hotkey. Why is that? Because with the hotkey, that's the feel I got. It just immediately dropped down. I get a bad feel right there. I don't want to have a lot of cents as my stop loss. I got in then with the limit order at 10-11, stop loss 10-12. And if I see that these 500,000 shares wall became 200,000 shares, I'll just bail on the trade with 1 cent loser before it breaks out, because if it breaks out, if I wait for it to break the wall and then go up, I will get slippage. And I had moments where I had sometimes 4 cents slippage on 1 or 2 cents stop loss trade, sometimes 6 cents slippage on 2 cents stop loss trade. So I had 3 R's losses. That's why when the trade works out, I make a huge winner outfit. 1 cent stop loss right here, and I took the first partial at 7 cents just to get a decent profit for first partial, so that in the future, if I'm getting into a similar trade to this, if I get some slippage, I could just cover it on other similar setups. IG, all those sessions are on YouTube, but I think they are not on the playlist, maybe by mistake. I'll put them all in the playlist, but they are all recorded and they are all on YouTube. You're welcome. Okay, that's good. Happy it was clear. So let's see Daniel's trade. And Daniel 1, 2, and 3. and Valentina after that. Okay, so Disney, you took it, I assume, for a parabolic reversal on the 5-minute chart. No, it's not parabolic reversal. So yeah, this long, I'm not sure. First exit was too wide and stop, a bit closer to the end of the week. So yeah, this was a short, not a long. I see it. At 10:30, it was a short. This wasn't a bad short. It's a little bit volatile. It did break the low, the pre-market level right here, then it made a higher low wave. It still was a reverse ABCD pattern. It was close to the non-moving average on the 5-minute chart, so you had a pattern right there. You took it to the short side, but you exit because of the wide stop right there. So yeah, this wasn't a bad short. This was a good short. Even if you just held on to it and you got subbed out, this is not a bad short. This was a decent one. Then you took it to the long side, and I love this long. It did break right here. This area right here was a fake breakout. You took it to the long side after the fake breakout, and after fake breakouts, I just put my stop loss either below the body or below the previous candles. I don't use it at this wick right here. I never use the wick of the fake breakout as my stop loss. So yeah, you could put your stop loss if you are so aggressive here, or give it a little bit more room right there. So that's for me where I would have put in my stop loss to the if I had taken it to the long side. This was a really good move right there. I would have definitely taken some partials there. It pulled back, came back up, and you add it to your position, which was smart as well. In this case, where I would put my stop loss here, definitely not less than that, and then you had your partials. So yeah, this was good. Let's see your Roku trade. Now this long, I wouldn't have taken it. It's just a little bit tough. Actually, I might have taken it and put my stop loss right there. It's similar to the engulfing crack setup. It's dropping down into a moving average. I just don't know what the other time frames showed, but if they showed some bullish pattern or some strength, I would have liked this here. Red candle engulfed by white candle, pulling back and coming back, pulling down and coming back up. So, and in these cases, I just use the wick right there. Let's say that in the 1-minute chart, it looked something like this. That will be my entry. This will be my stop loss, but it's just a little bit tough, especially on Roku, where it tends to get a little bit choppy. But yeah, this wasn't a bad setup. Took some partial. This long, I 100% I wouldn't have taken it because it started getting toppy. You see this here? This is the bearish engulfing sandwich. It did break up, fake breakout, and then it started getting toppy. You had buying pressure there, then you're having a doji, then you're having a hammer, then you're having a fake breakout, then it's higher, higher, and higher low. It's just getting toppy. It's not looking strong anymore. So yeah, this long I would have just avoided there. Yeah, exactly, Lou. They are in the video section on YouTube, but I'll just put them in a playlist so that members have easier access to them, just in case. So yeah, Valentin, and this is the last trade for today, guys. Valentin, and we actually went through this trade. Same thing. It did break the level right there, squeezed down, looked weak, and then it squeezed back up, closed as a hammer. You took it on the same candle, and that's something I tend to do as well sometimes. When I see that the candle going from red to green on a similar pattern after fake breakdowns, I usually take it to the long side, tighten the stop loss, and then just go in with the momentum. Last exited a little bit below break even. I assume this was a long, this was a little bit of a risky long, but I do those with level 2 reading. I'm not sure what you saw on this thing. Playing the pre-market high as support or pre-market level as support. But yeah, this was a little bit tough. I'm not sure I would have taken this thing. It just depends. Yeah, I can't just tell based on looking on the chart here. Do you find that bookmap is paying for itself? Yeah, for example, this AAL trade, how did I find it? The one I have taken here, this one. This trade, I found it on bookmap. Like, I wasn't paying attention to it, but when the price was here, I saw this huge ask right there. It wasn't on the level 2 there. I just saw it in bookmap, and I told myself once the price gets closer to it, I'll just see what happened there, and then I'll take it to the short side. So if I was watching AAL closely, I would have seen this level. But the problem is, sometimes you're watching at the level 2, right? And the huge asks, they are appearing when the price is close to them, right? You see that a lot. The price is getting closer to a level, and then you see those huge asks there. Once the price gets 2 cents below them, those asks, they disappear. They are not getting pulled off. They are still there, and Bookmap shows that they are still there. It's just that for some reason, I'm not sure why, on the level 2, if the price gets a little bit farther from them, they are disappearing. If the price gets closer to them, they are coming back. But on Bookmap, they are still there. They are there even before the price gets to them. Even right after the market opened, you see those huge shares at some levels right there. And that's why I love Bookmap. I wouldn't have seen this order right here unless I was watching it at 10:11. I think it's not DAS issue. Definitely not DAS hiding those. It's the DAS also gets this data feed, right? You are paying for the level 2 data feed, and DAS also pays it. And they are getting this feed. It's not that they are making this feed. And there were news on them. I think Peter said they are buying Grubhub. Yeah, Grubhub, and that's what's causing it to run. We'll see what it does. It's really interesting. I might trade, but I'm not sure I'm going to trade today. But yeah, that's it for today, guys. Thank you for sticking with us here. Thank you for sharing your trades. If you have any questions, you can always ask me in the chat room, email me, and have a good day, everyone. Thank you, Anne, and thank you, everyone.